Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn and Associates with your metals market update, bloodbath update you might call it in the metal markets, for this Wednesday, and we are now on August 15th, 2018, 2:45 p.m. Central Daylight Time. The stock market down, but not out, not a monster day in any manner, any way, shape, or form, but the monster day to the downside has been in the metal markets. The combination that we talked about yesterday in these videos of China slowing down, the combination of more sanctions now from Turkey on the U.S., and you know what we're going to do. We're going to turn right back and slap them with something they're not ready for. And the fact that the president's ideas of these sanctions are, in a form, economic war, are causing the real trouble, are causing the ruble trouble. I can go on and on down the list of currencies that it's causing trouble to as the president levies these. Now, I was on Fox Business all of it 2:10, so this is 2:45, what, a half hour ago, roughly. And I had mentioned that, you know, I don't see the carnage in the stock market the way that people might think, because, yes, you were down a lot more than this earlier, over 300 points, but you've recovered. And that's because the economic data in America is still good. What if you do one trade deal in the next 2 weeks or so? You think the market will rally or not on that news? And then that domino impact might happen. Got to keep your eye on that. What if somebody says enough of this? Let's sit down and talk for trade deals, other countries. Could happen. I'm just pointing this out. Dollar index nowhere today. You rallied a little in the euro, and the Swissy, you did a little rally, and the yen got buying today as people want to move away maybe from the dollar and get into another safe haven. But you didn't get really crazy buying in the bonds or the notes. Now, when we look at the weekly closes of gold, and this isn't the closing price yet, but it's in this neighborhood. You're down $34 for the week. You've gone straight down, if you look at it. When I say straight, not an exact straight, but pretty much straight down on a weekly chart basis since we consolidated here in the March through May period and then let go to the downside. Now you're down from all that about $1.80. That's quite a bit of a break. As I pointed out to you when I got back from holiday on Monday, this pattern was what I was looking at when I came in. And when the market opened on Monday and let go, you broke this pattern to the downside. So you broke a support pattern. The market has been falling ever since then. When we put on swing lines, you've got a pattern of lower highs, lower lows. That's bearish. The only thing that can knock that out on the, let's assume tomorrow, would be taking out this 1205.80 to break that pattern. What else? The market has stayed under this 18-day average of closes since literally back here in June. That is bearish. Whenever you're under that number, I say the market has downside bias. You're well under the 100-day average, you're under the 18. Where could support be found then? Maybe the lower Bollinger Band? Nah. You gave up on that when you started pushing it out to the downside. So the market's in what I call sort of a free fall. No way I can see on the indicators I have what to do there. And now to join the parade, you have a new problem. Because if you look at the slow stochastic, both numbers today, as you can see, are under 20. Yesterday they were under 20, and the day before. It takes 3 days to have that. You were not that way on Friday. So now you're embedded. Embedded means you convert the market from being one of getting oversold. You have to first get oversold, and then you convert the market, if it can, to locking in a downtrend. So until the red line now gets back over 20, that's the thing I'll be looking at, the rallies in this market most likely are going to be sold hard by the professionals. When I look at GLD, the popular ETF for gold, you've had this embedded reading all this time. And the market has done its job of breaking each time with it. You don't longer look at, is the market making higher highs, higher lows in those patterns? This takes over when you get the embedded reading. In GDX, same thing. Look at how this market has held that. So I realized that, a lot of people go to the other parts. You have to understand, at least I teach in my charting course, and you should look at that on our website, the idea of how you learn to understand a hierarchy, and I try to give you all the things I've learned over the years, and as I keep learning, there's no such thing that something new doesn't show itself. It always does. There's a chart pattern in crude oil I talked about the other day. God, I haven't seen anything like that. I don't remember the last time I saw one, and it's just happening. Look at the gold-silver ratio. One of the things I've pointed out to you repeatedly here is that typically, and I can only go by the word typically, this is not what forms a low in gold. It's typically when it goes the other way. And you're not getting that, which is bearish on all the metals because the industrial metals are what's under attack when you get tariff wars. And look at how this silver market has just plummeted. You're down 67 cents right now. You're oversold, not embedded. You broke out of the sideways action literally right here. This was trying to get sideways. Normally you get more sideways than that. And when I left on my vacation, the market just let go and hasn't really returned since then. Frankly, it wasn't even out of that when I got back on Monday. It was Monday that set this whole thing down, and it's just fallen apart. Now, will it get too cheap? It could. But if you don't solve these trade wars, what does the word cheap mean? You need demand to get these markets going. A market that's telling you that, and a wonderful market that is a barometer of industry, is copper, because it's used in so many products. And copper today absolutely joined the parade of falling apart. And now it has a top in place that until you get through these highs here, be careful. This market is now saying, watch out below. All this sideways action since July, right through mid-August now, acts as a top. Could it just bounce back? Of course it could. But the action is very, very bearish right here. In the platinum, same pattern. You went sideways, did it for a while, and you can see that. And then you started yesterday breaking out. It was actually Monday. I want to take that back. You followed through a little on Tuesday. That's a warning sign. You're not getting your bounce. And today it just let go on you, hurting those people. And the same starting the first day of it, at least in the palladium. But the difference in palladium is it's not quite as pronounced sideways as the other metals were. I think you can see that. Oversold? Yeah, just about all the metals are oversold, but gold, which has converted itself to bearishness. And at the same time, the dollar index, well, if you look at where the upper Bollinger Band is and what the market is doing, the market is trading at 96.58.5 under the upper Bollinger Band. That was exactly what it should have done today. Be back underneath it because you had 4 days in a row over it, and you typically don't go more than that. But it's riding the band. It's doing what here? If you take a look, both numbers are over 80, both over 80, both over 80. So you've got 3 days in a row. That's called an embedded reading. And when you get an embedded reading, it implies to me at least, and this is what I teach in my charting course, that as the market pulls back until that red line closes back under 80, you're probably going to find buyers in this market. You know, a lot of what I talk about, I write about. And in my market research, what I make available, if you haven't tried it, is my thoughts. I prepare you for the next day's trading with telling you what reports are coming out, and I do my best to give you what the expectations are, a big synopsis. I'll write on the topics of the day, and I don't write papers on it. I write it in a way that it's a couple of minutes of your time, and I mean a couple of minutes of your reading time. That's it. And I'm trying to get you all the information I can that pertain to what I think is important that day. Now, some people will write detailed reports on the grains and all that. Well, we tie that together with the Linn research. But my own is to give you a different spin on things. If you'd like to try it, it also includes, if you'd like, my morning subscriber video. I'd like to put it in your hands. Call my staff. Go to our website. You'll see Ira's free offers. Choose this. Our staff will get hold of you, get you all set up. You can click up here as well. And yes, no credit card, nothing needed. If you'd like to try it, sign up for it. I'm Ira Epstein. You have a good day. Let's see where the market is as we're getting into the last minutes of trade. Not falling apart, as you can see. Not any further, at least. You have a good one.